What's up, everybody? Zach is back with another episode of Journey to $1,000,000. Let's go ahead and get right to it because the markets are opening in about an hour when I'm recording this. I'm a little bit behind schedules. Last week was a really good week for tech. We finished pretty strong. Triple Q finished actually at 337. And I'm hoping that it can pass 338 this week, and that would be a sign that I think it's going to keep pushing upwards. The 10-year Treasury is pretty much sideways. Finished last week around 1.66%. And yeah, I mean, it was a good week. Portfolio was all the way back, and I'm feeling pretty good for the tech and semiconductors. But of course, there is going to be a cool off, and I wouldn't be surprised if this week we did pull back a little bit. So we could have some puts going on. But anyways, I would like to take a moment to look at the new watch lists on Prostockadvice.com. So I've totally revamped the watch list, and basically what I'm doing is let me make sure I'm sharing this. Yep. What I'm doing is basically every week I'll have the new long-term ideas and swing trades. That's just the bread and the butter. And it's going to be the same, like we have the target, the entry, and of course the risk level. I'm not going to put a time frame on that because the time frame is pretty much swing and long-term trading. This could be buy and hold, and it's really going to be your decision, no matter if you want to buy and hold it, if you want to buy and sell a couple of months later. I mean, it's going to be up to you, but just that's what I'm thinking for my swing trades. I mean, we could do an ACIC. I might buy it tomorrow or the next day, and I might sell it 2 or 3 months from now. But on the other hand, ARKG, I might just buy and hold that for a few years. I mean, this is going to be up to you guys' thinking, based on your portfolio, based on your risk, how much you want to put in one of these positions. But just to give you some sort of idea. And then the short-term options, since I did some polls and my analytics tells me that you guys really like to see the short terms. So weeklies, monthlies could be expiring in 4 days, could be expiring in 2 weeks or a month or something like that. But basically that's what we're going to be seeing. So, but just for example, for the triple Q, if triple Q does get above, I don't know, 338 or something like that, then I think that we're going to push forwards. So I might buy a call for 340 strike price, just for example. But on the other hand, if it doesn't break 338, then we might be seeing a pullback to the 50-day. And if we do see a pullback to the 50-day, maybe I would buy a put instead. So let me pull this up. So basically, if we're looking here, I'm thinking if it doesn't hold past 337, 338, and now it is down a little bit in the pre-market, so we'll have to keep watching that to see. This is not going to be any rush, so it's not like, okay, I need to get a call and I need to buy a put on any of these. Really, it's just going to be like I will be watching it, and just this watch list is just going to give you an idea of what I'm watching, thinking of getting an entry into. But it could go either way. It could be a call, could be a put, because we'll just see how it goes. But that's the basic thought process behind the new watch list. And yes, it will update every week. On basically Sunday night, Monday Monday morning, I'll have it all finished. But anyways, so yeah, we'll see how it goes. But yeah, I mean, let me know what you guys think about it. And while you're down there, smash that like button. We need some more likes on this channel. Anyway, so ACIC, so that's the first one that I wanted to review, I guess. It's a notable mention. And this is an S-Pack that confirmed that it's merging with Archer Air. And Archer Air is it's like the flying taxi company, which they actually are. Now, I'll just go ahead and read this quote for you. Archer, a leader in urban air mobility, space commercializing electric vertical takeoff and landing aircraft, has announced its commitment to launching its first UAM network in Los Angeles by 2024. Archer's partnership with the city of Los Angeles will work to address some of Southern California's mobility challenges, offering people a new option to travel in and around dense cities in fast, safe, sustainable, and cost-effective manner. So I mean, basically, that sounds interesting. And I mean, this is definitely a speculation and an innovation play, which I do like, and it is an S-Pack, although it is a little bit safer because it is confirmed to be merging with Archer. And we made some money off of this one in the past, and probably you guys have too. But if we look at the if we look at this, it is just really taking a hit. So it ran up from $10 because remember most SPACs do IPO at $10. So it ran up to 1860 and it fell all the way back down. So, if you like this speculation and innovation play, if you like Archer Air, then this could be for you. And I think it's a good deal. If you're interested in this type of play, I think it's a really good deal because, it's trading at 1021 right now. And even if we go to the pre-market, it's down to 1016. So if we can get it for $10 or less, it would be a pretty good deal, I think. And of course, it might dip under $10, but I think $10 is like a baseline, base level price. So I think that one could be pretty interesting. Let me know what you guys think, though. This is going to be a longer term play, and that's why I put it for the swing trades. So pretty much the point is I would swing trade this one. I would buy, 25 shares. If it dipped down a little more, I might buy 25 more. 50, 100, I might just start accumulating dollar cost averaging into this position and just letting it run. Maybe run up to 11, which is not that much. Maybe the 50-day moving average, and then sell it off. Maybe sell half, something like that, just to give, and then let the rest run, but just to give you guys an idea. Anyways, the next one is Gevo, which operates as a renewable fuels company. The company commercializes gasoline, jet fuel, and diesel fuel to achieve zero carbon emissions and reduce greenhouse gas emissions with sustainable alternatives. Its products also include renewable biodiesel, iso-octane, isobutanol, sustainable aviation fuel, isobutylene, ethanol, and animal feed. So, obviously, just to TLDR, that is a renewable energy and fuels company. And so I really like this company, and this is another one that before the tech dip in this cyclical transition, we had made some money off of this one too. And so I'm revisiting it. But if you see, I've done my fundamentals they haven't changed on this one. I am very bullish on the renewable energy. I think this one could be an interesting also for a swing trade, although I wouldn't put as much into this position. But it has pulled back below the 50-day moving average, although it isn't it's not like bouncing off the support at the 180 like a lot of the positions are. So this one hasn't dipped all that much in relative, but it is going off of the support, which it's a longer support. So we'll see if it holds, but so far it looks interesting to me. So, if it dips down into the $8 range, I think it's a pretty strong buy at $8. But anywhere between $5 and $10 is probably a good buy. I went ahead and set a target of $11 on this one because I think $11, it's very achievable for a swing trade. Of course, if you want to buy and hold this one a little bit longer, you could always wait for 16, which I don't think is any issue. But it would definitely be a little bit longer. But hey, I think start taking profits at 11 and let's just try to ride it up over a couple of months. I think it's an excellent candidate for a swing trade. And then the Alibaba. Actually, Alibaba is the next one on the list, and it has had some pretty major news. And if you guys don't know what's going on, but actually Alibaba just got fined 2.8 billion USD from the the Chinese government antitrust probe. So that is horrible news, and this has been coming for a long time because the whole Jack Ma disappeared, and I don't know if you guys remember that, but he's got a big mouth, and he was a really famous and respected guy in China, but not so much anymore. Anyways, it is what it is, but it has taken a huge beating, and it continues to get beaten down. So, in my opinion, as living in China, I don't think this company is going anywhere, at all. I think Alibaba is still going to be here. It's got an interesting support level, in my opinion, going on right now. And this is past the 50 days, past the 180 day. It just keeps getting beat down. But the question is, if you knock it down, will it get up again? And we're about to find out, although it seems like it has a few times. So I don't know, but I don't think this is going anywhere. I think people will overreact, and actually it's already up 6% pre-market. But Alibaba is basically already starting the suck up process to the Chinese government, so I don't think there's anything to see. Of course, they agreed to pay the 2.8 B's, capital B, and I mean, they're just gonna suck up, and that's all. Nothing, pretty much nothing going on. Like, as soon as you just do and say and whatever exactly what the Chinese government wants, they're happy. They'll stop poking around in your business. But if you say something that they don't like, which he did, then they will get up all in your business. But now they paid their fine, and that's just the price to play the game. And hopefully for them, they will keep trying to play the game a little bit better, because there's always a game to be played in China when dealing with them. But anyways, so I think this could be an excellent buy, and I was hoping that it would pull back a little bit more because some of the news is just breaking now. Although it seems like they've started the suck up process, which I don't know if it's going to, if it's going to drop any further. But hey, we'll see what's going on. Even though it is up 6% right now, we'll see what's going on. But it might look like it's going to bounce off that support. When that's a long-term support too. But anyways, I think it's interesting. Could be in for some leaps. Possibly you could get into some leaps here, because I did set the target price at about 264, and that's my first target for the swing trade. Entry around 210. So yeah, I mean, we'll see. We'll see if it falls, but could do some leaps, could do some commons. I mean, this is going to be up to you, but I do think this is a great opportunity, in my opinion. I wouldn't care too much. I mean, they're going to do everything they're supposed to do, I'm sure. I think he forgot where he was, and now I think he remembers where he is, so I'm pretty sure it's going to be fine now. But anyways, moving on to the last but not least, and this one's going to be short, but it's going to be ARKG, which is, out of all of the Cathie Wood ETFs, I think ARKG, which is the Genomic Revolution ETF, it has the most upside still. It's not trading high, it's still getting beat down, and it's looking like a big McDonald's M right here. That is a real thing. That is a real pattern. And the McDonald's M, the Golden Arch. So we're almost completed a full Golden Arch here. And when it does, I think I would buy it if it hits the 180-day moving average again. But anyways, and that one for me is a long term. I've already got positions on ARKG. I think there's still room for it to pull back more. It hasn't been doing well. And if it does pull back again to the 180, I think this could be a good scalp swing trade, or even just long-term buy and hold. But that's pretty much all I have for you to for you. That's pretty much all I have for you guys today. Make sure you take a look at the watch list, because I have changed it. Let me know what you guys think about the change, if it's a good change, or if you prefer the old one, the new one. I just feel like this new one is going to be a lot more relevant and keeping it fresh every week. Of course, I'm still doing these write-ups, so every time on the watch list, I'll have like the long-term swing trades, like the ACIC, the GEVO, the BABA, and the ARKG. I mean, I'll still do the write-ups about on them, like today, and the commentary and whatnot. But anyways, that's pretty much how I see going forward. I think it will probably be a little bit better because of the old watch list, the way that I was doing it. The watch list just kept growing and growing and growing, and even if I got in and out of the positions, they still were just a little bit dated, I felt like. So it might have been a little bit useless, I think. So anyways, let me know what you guys think, but that's all I got for you today. I will see you guys on the other side. Peace.